All right, good morning, traders. This is Blake Morrow, and we are not sure where Dale's at. That's the problem with getting up at 3, 4 o'clock in the morning is that sometimes you sleep in on accident. It's just a part of getting up so early. So anyway, I'm not too sure where he's at, but he should be. I'm sure he'll be here shortly. He'll probably get up and go, "Oh my God, I'm running a little late." Anyway, just wanted to say, Dale, we haven't heard from him, but I'm sure he's fine. So we are seeing. Let's talk about what we're seeing here in the markets. First of all, let's talk about equities. So the equity market, as we talked yesterday, and one of the risks about closing above the 38% retracement, which you can see right here, is that now we're making a run for the 50% retracement. So first level of resistance is kind of where we're at right now. This is going to be, you can see this right through here. This is a pretty good level of resistance, and we're kind of probing this zone right now. All previous support, spike lows, we're pushing up against there. But I would think ultimately, maybe even as early as today, we're heading to the 2788 level, which will be the 50% retracement of this decline. All right. So, and as we have talked before in the past, we can reach all the way up here towards 2900. The problem with where the market is currently is that, to have a sustained move at these levels, in my opinion, is going to be very difficult to do without some sort of vaccine for the coronavirus. At this point in time, there's been a lot of damage to not only the US economy, the global economy. So, we may probe up here because that's kind of a characteristic of, equity markets that are under pressure severely. Like, we enter a bear market. These bear market rallies are pretty violent. And that's what you're seeing right now. You're seeing this violent, snapback rally in equities. And, chances of us, continuing to make headway towards these levels, I think is quite high. But the thing is they're, like I said, they're probably not sustainable. The overall impact and the long-term impact that we're going to see with the virus and how it's affected, normal life, and how quickly, or actually I should probably say how slow we end up getting back to quote unquote normal life without a vaccine, is to be seen. And like I said, I doubt it's going to be too fast. So the fact is that we may spike up towards these areas in the S&P, but I expect them to fade. Now, if you're trying to trade this, it is a very tough game trying to figure out exactly where the top of this rally is going to be. But I would, like I said, I would assume somewhere in these areas over the next, whether it's today or the next couple of days, we're probably going to see some significant resistance come into play, and people are going to start trading against those levels. And my assumption is that we will probably do something like this. Now that we've taken out that 38% retracement, we're probably going to do something like this, and find some sort of levels to consolidate at moving forward, right? Obviously the news cycle that we're getting from the virus at this point, wait, hold on really quick. Can you guys see my charts?
I can, Blake.
Yeah.
You
I can
can
see your charts. Yes,
okay.
I can.
Okay, thanks.
Yeah.
Some people in the chat room were saying that they couldn't, so.
Okay, what we can do is the following. Let me take over the screen from you and you take it over again. Perhaps that will unglitch it for some. You know what I mean? Okay. You want to get it back again and see if that's going to fix it for them? Okay, I can see your screen again without a problem.
Okay. So hopefully everybody can see the screen. I wasn't no one had mentioned on the webinar that they were um, Dominic said can't see it on YouTube. Maybe you want to check the YouTube link just to double check. Okay, thanks, Steve. So as I was going back and saying about the S&P, what the risk is here is that we are we're getting this snapback rally. How far we can extend is really more dependent on you have to it's more dependent on the cases that we see, the deaths, the number of deaths. Jane, who was telling us, she's in the chat room, she was telling us about the Spanish numbers. They had 4 days of declines, and now they're seeing an uptick in the numbers again, and that's going to happen. I think that's going to happen not only in Spain, but you're going to see that in the United States. You're going to see an uptick in certain areas of the United States, but New York overall, I think, is, since it is viewed as the epicenter of the virus in the United States as of right now, those are the numbers that everybody's watching, because we're trying to gauge, as investors, we're trying to gauge what is the longevity of a lockdown under extreme circumstances. And that's what New York really represents for us. It's like, okay, well, New York was down for, they were down for, 2 months really of inactivity. Can we expect that in California, and can we expect that in Florida? And excuse me. One of the problems of getting up at, 3-ish in the morning. Oh, and are we going to see that in Louisiana, that type of thing? So again, expect a lot of volatility, and again, I'm going to reiterate, the S&P that you're seeing here, the stock market rally, I don't believe it's sustainable. It's not sustainable because it's not like life is going back to normal the way it was, right? Again, if we see a vaccine where it gives us hope that we can do a broad-based vaccination of the human population in the United and globally, and life will eventually return back to normal, that's a different story. But as of right now, it's not. I was talking to I was just talking to some neighbors, because that's all I can really talk to, right? Minus people online and whatnot. But like I was out front of the neighbor's house, and they're obviously giving our social distancing 10 feet away from each other, but it's nice to be able to socialize with people with human interaction. And if you guys aren't aware, I'm in Arizona. We have a lot of elbow space. It's not like we're congested. We have homes next to each other, but people you can have a safe distance between people. Anyway, I was talking to some of my neighbors, and they're like, well, we don't even know, when's the next time we're going to go on a trip with our families, and when are you even going to feel safe about taking your kids to Disneyland? And it's sad to think about that, but it's true. Those are the things that like I was supposed to travel to Greece at some point this summer or this fall. I can't imagine piling my kids on a plane and going. Even if people start going back to work, it's like I can't even imagine that happening. But you have to think about that that type of attitude globally, with not only regarding vacations and but you have to talk about work and people doing just normal activities. Anyway, I don't have to go on really deep into this, but that's why I don't think that any rally that you see here in the S&P is going to be sustainable. B, it's not going to go too far. 2,900 might be capping it over the course of the next week or two. Okay. All right. So let's talk about currencies. So with the recovery in equities, as I alluded to yesterday on Twitter, the dollar should weaken. And you're seeing the euro dollar is spiked up. We're seeing the dollar funding need dropping. somewhat. And that's why, oops, sorry. Oh, there's rumors that Boris Johnson is out of the ICU now. That's what I'm hearing right now from one of the guys in the office. So so that might allow for the cable to rally back towards 124. But I think the cable's already squeezed a lot anyway, as it is. And you can see from last night we had this false breakdown. You know, people were shorting the cable yesterday because of this news. They're all getting squeezed out right now anyway. So I think the upside in the cable is probably going to be fairly limited, even on that news. But you look at the euro. The euro has the ability at this point, coming out of this descending wedge. We have the ability to reach for 109.15, maybe even close to 110. So I think that the risks of the dollar continuing to sell off are quite high at this point. All right, so just watch the euro here, and we're going to find, and we're going to face some resistance right through here. This is the 38% retracement that comes in around 109.15. That should be our first level of resistance for the pair. Okay. Here's the cable, and as we talked about the cable actually, this happened in Asian trade right here. You can see the spike low. This was a stop run. There was no news. This is just basically stopping everybody out that was long. Probably got some traders in Asia short. Maybe even some European traders that were like shorting the cable yesterday late in the evening in Europe, before they went to bed. They're like, oh man, this thing's going to break down. Boris Johnson's going to, he's going to be in ICU forever and on a ventilator or whatever. And then people got short. Now they're all getting squeezed. So that's the result of what we're seeing right now. So we are at the 618 of this reversal, and we're also heading into some resistance here. So I would think that the pound's going to be facing some pretty good resistance up at these levels, where we're currently at. Let's talk about the Aussie. So the Aussie is challenging the 88% retracement. Now, the Aussie dollar can reach for 62, but the Aussie dollar is very similar, and I feel very similar to the Aussie that I do about the S&P. Gains here are going to be limited, in my opinion. All right, gains are going to be limited. Can we make further gains in the Aussie? Sure, we can. I think the risk of the Aussie heading towards 64 cents is probably pretty good. Somewhere up at these levels. This is the 78% retracement. I think that's all doable. One of the things about the Aussie, very similar to the S&P, is the Aussie is going to be extra sensitive to growth and globally. Again, we can go into the whole conversation of why I don't think that global growth is going to come back at the levels that it was, because people are going to be a little bit more hesitant. Societies are going to be a little bit more hesitant. Growth is going to be slow to coming back. So the move that you're seeing here in the Aussie is based on the euphoria that you're feeling in the equity markets and and whatnot. But again, I think the upside is going to be fairly limited to maybe a move towards the towards the 78% retracement, somewhere up here. But there is scope for further gains in the Aussie. All right. Kiwi is a very similar situation. If we can get past the 618 retracement here, this was, this held us, it was pretty key. But what I'm really looking for, you see this previous support that comes in around 62 cents. That's what I'm looking for in the Kiwi. Now, if you take, I want to actually point out the Canadian really quick. Crude oil is weak, and the demand destruction that we've seen in crude is just, it's been quite substantial, in my opinion. The dollar Canadian has come under some pressure, but you'll notice that we're probing this longer term 38% retracement here around the 140 level. Can we, have some further losses in the US dollar Canadian? Yes, we can, but this is actually a currency pair that I'd rather be a buyer of than a seller. You know, with the weakness in crude, and like I said, the demand destruction of crude right now, it's pretty amazing. You know, what I would be looking for is probably something that looks more like this. Probably let's shorten up these a little bit. I'd be looking for something that looks more like this, okay, in the dollar Canadian, if I can get it. And you could see how, you know, with the rally that you're seeing in the Aussie, the question that comes to my mind when I'm looking here at the Canadian is, why isn't the Canadian a lot lower than it is? Not saying that it can't make it there. I'm just saying that why isn't it right now? And so, uh, you know, the dollar Canadian may be a good long here in the future. Now, uh, you don't have to trade you know, the dollar Canadian. The better trade might be, you know, the euro Canadian, you know, playing it off of some support, you know, whether it's here, you know, I haven't looked at this chart in a while. I'm just giving you guys an example of, you know, another option versus trading the dollar Canadian, you know, per se. And by the way, the euro Canadian, it's not a chart that I normally follow, and we don't do analysis on it with ForexAnalytix. So that's why you saw that, you know, my drawings were a little older there. Excuse me. They're a little older there. But anyway, dollar Mexican peso, we had a really key reversal yesterday. Talked about the false breakout. That was a shooting star. We closed near our lows. We sold off today. So everything happened today that would be textbook for the dollar Mexican peso. All right. Key reversal day, false breakout, follow through to the downside. Now, the question is, from where we're currently at, you know, how much downside are we going to get here? This is very similar to the dollar Canadian. I'm surprised we are not a lot lower in the US dollar Mexican peso right now based on the rally in equities. I'm very, very surprised. By the way, the Swissies breaking lower here. See, the Swissies trying to roll over too. So anyway, yeah. So with the dollar Mexican peso, you're finding some support here. You know, I envision that we're going to eventually just kind of drift down here, and you know, probably, you know, not make a lower low, and you know, try to form some sort of new, you know, formation that looks maybe something like this. You know, again, what I try to do is I try to envision what I think is going to happen. It doesn't always happen that way. It's just, you know, it's you know what I'm thinking is going to happen, and I try to play into, you know, how I imagine things are going to happen in the future, and that's kind of the way that I'm seeing the U.S. dollar Mexican peso near term is we're going to be, you know, still in a bullish trend, but just, you know, more or less leveling out. And you know what alters this, you know, this you know pair to move completely lower probably has to do more with global economic activity and the virus overall versus you know what happens in, and I guess you can add probably the S&P too. So it looks like the cable is moving. The euro is really squeezing higher here. Let's take a look at the euro. Yeah, euro's really, you know, continuing to squeeze higher. So is the cable too. The cable's pushing towards, you know, that resistance. The euro's making some headway here. Yeah, I mean the dollar looks, you know, again, the dollar's under pressure. Why is the dollar under pressure? Because the dollar has been in demand while there has been risk off since that pressure is easing off of the stock market, and we're starting to see that bounce. You're starting to see dollar selling come into place. So if you know if you're a dollar bull, you know, you're not really understanding the dynamics of what's happening with risk on, risk off at this moment. And that's one of the things that we've been talking about extensively since this sell-off, right? Since probably about the second or third day of this sell-off. I'm like, yeah, the dollar's weak right now, but it's going to start to strengthen as, stocks really come under pressure. And that's exactly what's happened. Dollar, strength was, massive, and now we're starting to see that that abate a little bit. One of the other things that you have to think about regarding this dollar too is all of the measures that the Fed has taken off the dollar funding pressures. They have offered unlimited amounts of funds through repo activities, through through repo operations to different central banks, and that's flooded the market with dollars. So that's really brought down the demand for dollars, and now you're starting to see a lot of that dollar demand unwind, and that's why you're seeing this euro rip higher. Now I'm not going to talk about gold and silver. I'll let Steve talk about that, and Stelios as well. I'll let those guys hit on it a little bit more. But I want to bring in Steve and Stelios and see what they're thinking this morning, so we can have a little bit of a banter. Good morning, guys. How are you guys doing today?
Good morning, Blake.
Good morning,
everyone.
How's it going?
Very good. The weather is turning better here finally, so at least we have that. But no, overall, pretty well. I'm looking at the equity markets, and I have to agree with you. I've been talking about this in the chat room and on Twitter and with friends. I think this is a bear market rally. And what is the main characteristic of bear market rallies? They're vicious. They're sharp and fast and really rip people's faces off.
They're convincing, aren't they?
They're very convincing.
That's what they do best.
Yeah. They convince you
at least have been telling people since near the lows that be careful, that because we can see a rally at any given point, and bear market rallies can be really strong.
Steve, I gotta give it hats off to you. When we were at 2,400, you're like, I'm targeting 2,700 minimum.
Yeah.
And here we are.
Yeah, and thankfully I am still holding half of my position, because it looks to me, I mean, now that we know the correction of the correction, meaning that consolidation phase, I can see targets taking us even as high as 2,900.
Yeah.
So I'm not saying that we're going to make it there. We might. But for me, it's quite important of making as much as I can to the upside, because as I had explained initially, I intend to use all of that to fund my new short positions, because I'm looking to be short again.
Right. And so let's acknowledge the fact that you were in our chat rooms when we were down here at 2,400. We were down. I've got to go back a couple of weeks, back here, and you're like 2,700. And I was thinking to myself, I'm like, yeah, I don't even see us making it over 2,650. This is when the 38% retracement was still holding. And you were like, nope, we're going to go to 2,700. I'm like, all right, well, we'll see.
Actually, Blake, I had to suffer a little bit first, because I didn't go long where you showed. I went long when we hit 2,400 on the way down. So we went lower first, and then we recovered. So I was short from, if you go to this chart before the low, before we found the low, when we hit 2,400.
You were long, you mean? You were long?
Yeah, I was long. Yeah. Sorry.
Well, I just want to say great call. And the thing is if you're not part of the ForexAnalytix family, we're in the chat rooms all day. And, Steve was rambling on at 3:00 in the morning when I got up. He was in here chatting away. You can see all the green are ForexAnalytix staff. But you can see, like, when I came in this morning, which is, an hour and a half, 2 hours ago, you can see here is Steve just chatting it up with, everybody else. As I came in, I'm quoting the, Financial Times and everything else. So, this is where we're all at, guys. So just, if you're a ForexAnalytix subscriber, if you click over here where it says go to chat room, you can come, you know, chat with us, and that's where we're at throughout the course of the day. You have to be a premium member of Forex Analytix to be in there, but that's where, you know, that's where you're going to find us. And
or a trialist, because
or
people
a
on
trial.
trial,
If you're
people on trial have access to our full services, so they can actually see how it is.
right, it's only $1 for 10 days, so you know, give it a whirl. All right, well, I'm going to pass it over to you guys. I don't know where Dale's at this morning. It's not like Dale to not be here, but you know, I've missed my alarm before, so it's not.
Yeah.
Yeah, it happens once per year. I mean, it's
It
totally
does.
understandable.
You know, it's not. And he was fine yesterday. It's not like he was like, "Oh, I'm not feeling good." Because he's pretty good about letting us know if he's not feeling well. So, so I'm sure he's going to be fine. He's just probably sleeping in, which he doesn't he know that like our Easter weekend and Good Friday is this Friday? And then he has, you know, he gets to sleep. It's a short work week. I mean, for crying out loud.
He wanted to make it a little bit shorter.
Yeah, I guess so. All right, guys. I'm going to pass it over to you. Thanks everybody for joining. And
speaking of which, Blake, we're going to have the online roll to see to find yesterday's winners. Actually.
Oh, right. There we go. And yeah. So whoever is the winner there, congratulations. I'm excited to have another member of the Forex Analytix family join us. So.
Okay. Thank you, Blake.
Thanks, guys.
Thank you. So
still,
the main event, obviously, is still the equities.
You want to go through with the roll first?
Yes. Do it. Yeah.
Okay, so we first
of all, there's somebody who's asking how do I enter the free draw? This happens basically
just by being here.
Yes, just by being here on this webinar. Only this week, every day this week, we're going to have a draw, and the draw you see is going to be for the previous day. So that this draw now is for yesterday's entrance. If you're here today.
So what we do is we export the list of in a CSV file. We export the list of attendees from the previous day. We pass it through a little program because we need to remove. You know, some people haven't submitted like emails that are valid. So you know, when an email is definitely invalid, you know, there's no point in us, including these people and duplicates and stuff like that. So, you know, by removing all those people, the people that were eligible to be drafted were 342. That's only from people on Zoom, because obviously we have, you know, we can't know who views through Twitter or YouTube or whatever. So, you know, that's only for participants on YouTube. So then we create a second list.
On Zoom, you mean?
Then we create a second list. I have two lists. One you can see here, one you can't see. It's in another screen with full last names. But, you know, of course, for privacy reasons, you know, we don't include it here. So we're going to go to the Google random number generator and generate three numbers from 1 to 342. Yep. And as you see, it works. I mean, you know, right? You put a minimum, you put a maximum. Yep. So we're going to get three names, and then we're going to email those people based on the email they've given on Zoom. I hope it's the right one. They look correct ones, because those that were definitely not correct ones we've already removed, as I said. Okay, so let's go, Stelio. First one is going to be 106.
Hey, that's you. No.
Let me see. 116. Here it is. Laura.
No, that's 115 you're looking at. 116 is one below.
Olga P. Let me go to the other list I have with last name and put a cross there so we know to check it. So Olga P. Okay. Perfect.
Second one.
Noted. Second one. 124.
Can you imagine if the same number comes up twice?
Hey, we're just going to roll again.
If it does, we roll again, yeah. So Michael G.
Michael G. So let me go to the other list. 124. Michael G. Noted.
Yep.
And last one, 56. Let's see who that is. 50.
Wait a second. While you're doing this, we're giving out 3 subscriptions.
Yeah, 3
Per
monthly
day.
subscription. Yeah, per day.
Oh my! I didn't know we were doing that. Wow, we are
Yep.
very generous.
We are, aren't we?
I thought we were giving out 1 a day.
No, we're giving 3 a day.
Wow. Okay. Well, hey, that's
It's
exciting.
great.
So if you
Steve,
guys are listening in, that's 3 every day. You got a good shot. Okay. Good luck,
Yeah.
everybody.
That's coming out of your face,
Congratulations to
Steve.
the winners.
Indeed. Okay, and the other one is Deandre S. Okay,
Yes.
so I have all names marked on the other screen. I have their last names. Theoretically speaking, I also have emails. So we are going to email you later today. So congratulations to today's winners.
Awesome.
And more tomorrow for today's participants. Okay.
Excellent.
So let me see if we have anybody commenting. Perhaps some of them are also here today.
No, I think the main
My
question
luck
was
here
how
is
do you...
same as in lottery.
The main
Okay,
question
how
is
could
how
it
do
be
you,
possible
how do you enter?
Yeah,
That's the thing.
just by
So
being here.
just be
Others.
here, and then the next day you're gonna be
You're
check
gonna be in
if
the
you
list
were...
of attendees. Yes,
Yes.
yes, exactly.
Okay, so so we were talking about equities, as we said before. I think this is a bear market rally. I was discussing with some friends on the internet and on Twitter and on the chat room. I think it's not unlikely that we could get up to something like 2850 or something like that in the S&P. So it can happen, and the speed at which this is happening is trademark of a bear market rally. Because think about it, the way I see it, and we've said this before here, assume that there's a vaccine tomorrow and there's no cases, no deaths, nothing in your country tomorrow. What do? Do you go out, you go start spending everything? Or if you're a company, do you start rehiring everybody? No, you don't. It's going to take a while. Obviously, sentiment is going to improve. It's going to be good for stocks, but we can't just go back and go straight back to where we were before. We just can't. I know we do have a huge amount of stimulus, which will feed through eventually, but I think the effects of this slowdown and this lockdown are going to be more pronounced than people think. And I don't think there's going to be within 2 or 3 or 6 months, we're back to normal. I don't think so anyway. I could be wrong. I've been wrong many times in the past, obviously, but that's my humble opinion. And so that's for stocks. Now we had also the RBA interest rate decision today. They already slashed mid-meeting to 0.25, and there's no way they were going to do any more. There's no point. But they did make a statement, and basically they affirmed everything that they said before. So they had announced a big stimulus package, unprecedented in their for the RBA, and I think that included an unlimited bond buying program. And they basically affirmed everything, and they said that we need to be proactive and act firmly to avoid a large scale of economic contraction. So pretty strong language, and I think they're very realistic as well. So what they've done is basically they had their Draghi moment. So whatever it takes, they're going to be there and they're going to do it. So that's what the RBA did.
It's a global theme nowadays.
Yes,
right?
yes, absolutely. So the Aussie has been pretty strong today. I think all commodity currencies have been strong, probably on the back of these rumors that OPEC is going to have some kind of agreement. The rumors are getting stronger today, so it's possible. We all know Russia have been playing hardball over the past weeks. And they've said that they can withstand low oil prices for a while. They have reserves. Well, I've said it before. I don't think they want to waste their reserves on this kind of war. But I think eventually there is going to be some kind of a production cut. And
one thing is undeniable, in my opinion. Somebody can make arguments of what they believe, for example, the dollar might do or the euro might do in comparison to other fiat currencies. But I think there is, very little doubt, or I'm assuming very few doubts, that this is a race for a general debasement of fiat currencies against, tangible assets.
Absolutely. I mean, the easing
Yeah.
and the bond buying and everything. What does that do?
Yeah.
That devalues currencies, obviously. Yeah.
Yeah, exactly.
So, yeah.
So anything, anything tangible should appreciate in nominal terms against currencies. Now, on the other hand, as I said, we can have a debate, and I do understand that you know there can be contradictory arguments about, you know, if the dollar is set to lose more in the process, or you know another currency or whatever. But the fact is that all currencies are going to be losing part of their real value. And that's a fact you have to accept, because let me put it otherwise. If there was absolutely no cost and there were no consequences in printing unlimited amounts of money from thin air, then we would have really solved forever, and it wouldn't have taken us that long, all issues of prosperity globally, right? I mean, if that's how you went rich and prosperous, then Zimbabwe wouldn't have any issues. For those of you that don't know, Zimbabwe ended up like printing like quadrillion denominations for their currency. Venezuela would have absolutely no problem as well. You know, the Weimar Republic in the 1920s, we would have had no problem whatsoever, etc., etc. But we know from common logic, basic economics, and economic history that there is always a cost in money printing. So unless you're one of the people that believe that you can keep repeating the same experiment time and time again, expecting different results, which is the definition of insanity, according to Albert Einstein, you know what's going to happen in this case as well.
Yep. So, yeah, what else is there to say? Not that much, actually. We're just waiting for this week's jobless claims numbers, I guess, and waiting to see what's happening with OPEC and the potential oil agreement. And
yeah, these will definitely be market movers.
Yes.
And you know, we're still witnessing this rally unfolding in equities, no matter which one you see. Here is the S&P, the equality target I was talking about before with Blake was the equality of the first leg higher. This was clearly a bullish pennant. That's what I wrote during the weekend analysis. And I think the next leg higher can even bring us, you know, close to that zone. You see, we have the 61.8% fib at 29.30. We have equality at 29.85. Before that, we have a nice confluence of resistances up here, the 50% fib and horizontal support resistance area, roughly at 27.90. So that's the first area I'm actually looking at. Might actually be enough to, you know, produce a failure. I'm still long half of a position, and I'm like 13.5% in the money. But you know, for me, this is not the end of this trade, because as I said initially, I wanted to be long because I believed we're going to see a squeeze higher. But you know, for me, it's all going to be about timing the short side, because I intend to use my profits from being long to fund my stop loss for being short, because I do believe that this is not over yet. And you know, as we've said yesterday, as Blake said, as Taylor said, even if the coronavirus goes away as fast as possible, which we do hope, you know, the damage to the economy is going to be there with us for quite some time. Nasdaq, somewhat stronger, attempting to slice through, and I say attempting because, you know, for me it's more important what happens by the end of the day. This confluence of resistance is at 8,200, the 200 daily moving average is there, the 50% fib is there, a horizontal support resistance area is there. So let's see if we're actually going to manage to close above that, because the fact that we are intraday above it doesn't tell me much. Here's the DAX. DAX, more or less the same situation. I see like a corrective bounce here. You can clearly see it. Upside targets of resistance, 10,880 is the next one. Ultimately, I can even see the squeeze taking us all the way to 11,570. You can see the 61.8 previous low there. But I do expect this to move lower again. FTSE, clearly weaker than other indices. You know, even more clear here that this is likely a corrective bounce. I mean, so far it's unfolding perfectly within this channel. I would assume that it's not going to be easy to go above 6,263. You see here the 50% fib. So so far so good, but don't get me scared, because I do think that the chances remain extremely high that, no matter how strong it looks, this is a corrective rebound. Okay. Now, going back to currencies, Blake already showed we found support here in the Euro USD. It's moving higher. For me, it's more interesting to talk about the cable, because the cable, in my opinion, was more or less obvious. It was forming a bull flag, obvious, as long as we held it, of course, right? Because if we didn't, it would have proved to be something different. So doesn't look bad to me. I mean, I can easily see us squeeze higher towards the 61.8% fib. Also, a little bit lower, we have the confluence of the 50 and the 200 daily moving average, all of them roughly at 127. So I can see us making it to 127 first before anything else. Also wanted us to have a look at the DXY on a 4-hour chart, because you can more clearly see here one move lower. This rebound seems corrective to me, seems to be failing here, which tells me that it is very likely that what we're going to see here in the DXY probably is going to be something like this. Okay, so if I had to make like a long-term assumption, would be something like this. Okay. So in the short term, looks like the DXY might have more weakness, might produce more weakness before we can hopefully see a higher high, a multi-year high, and I would then be looking aggressively for short positions in the DXY. Okay. Now, obviously, needless to say that if it plays out like that, that would more or less likely correspond, and we had this conversation yesterday because one of our friends asked, that would likely correspond to, let me draw on this, that would likely correspond to risk on, risk off, risk on, or so. Now, don't be that certain about that last leg, because I think that once the dollar goes in a big sell-off, it's going to be irrelevant if risk is on or off. And after some point, when the depreciation of the dollar is going to be sharp, US indices are actually going to be performing fine, because the dollar is going to be devalued. So, they're going to be offering more value to foreigners. So I can tell you about this first part, though. This might mean a little bit more risk on, and then we can go for that, last leg lower in risk, which might even take us, to lower lows like 1800, 2000. And then I can more easily see a period that, the dollar is going to be undecided, and then it can go to a sharp sell-off. So that's, that's how I envision things at the moment. Okay, so let me go through a couple more things, and then I'm going to go over your questions. Gold and silver. Now, crude, has pulled back somewhat, but still remains very decently bid. So it's obviously waiting for headlines and news. So I wanted to focus more, because there was a question yesterday that I didn't have time to address, on natural gas, because natural gas is actually breaking out from this channel. And that's quite a bullish development. We already had a prolonged period of an RSI divergence here on the daily. You can see it. We had a double bottom forming here, which we broke today, because yesterday, in essence, we closed right at the high of that. And now we've triggered a double bottom formation. And let's take a measured target, since we're at it. Now, measured target would be up there at 2, roughly, as you see. So we have a measured target at $2 for natural gas in this double bottom. And if we close above the channel today, so if we confirm this breakout, we also have the implications that this bullish breakout from this channel that has been Since November, it has been actually, holding price within it. So, quite a nice development with roughly $2 being the next upside target, and above $2, I think we can squeeze even further. So natural gas is probably showing the way higher. It was anyhow showing a lot less weakness, and we had commented on that than crude was doing. So it was already showing a divergence in comparison to crude that was pushing to new lows, every single week until a few days ago. So I think it looks good. Now, having to do with gold. Gold is still performing quite nicely. I mean, we're very, very close to the highs. Overnight, we went as far as like 1670 something. Silver is performing better. You see still rebounding within this corrective. We'll find out. Channel, as I said yesterday, the next upside resistance that I'm looking for is the 61.8 at $16. So, I want to see what it's going to do from there. But in any case, don't try to fade these metals for all the reasons we've mentioned, right? Copper is also showing like a relief rebound here, but so far this might prove to be corrective. Pay attention here. We've already touched an area of resistance at 230, 232. If we go over that, we can move all the way up to 248. Okay, that's a big breakdown area. So I would be very careful there, because I assume that at least initially we should get a rejection from there, if we even can make it there. Okay. Now let me go through some of your questions. USD CAD. Listen, I analyzed USD CAD yesterday, and I'm very happy to see that Blake redrew his drawings today in USD CAD, and he came to the exact same conclusion I had already come to, and I respect Blake's point of view very much. So I like the fact that he's seeing things the same way I do. It gives me more confidence. What we said yesterday was we either break higher from this channel and we head directly to new highs, or this corrective move continues longer, in which case we should move towards 138, and I can see us finding support there and moving higher. So bottom line, I like it. I would very much be interested in perhaps buying some USD CAD at 138. I think it's a good price to look into it. USD CAD still looks one of the best USD pairs. So one of the few pairs I would want to be long the US dollars is the USD CAD, and that's it. So I think you need to be a little bit more patient because getting rejected again from that flag opens the door for 138, but I think that 138 is offering good value. I'm still short, by the way, USD NOK and Euro NOK, that I very, very much like, not only the fact that we're breaking down from this corrective move, but the fact that this corrective move was so weak. It makes me feel really, really good about it. So I'm still short USD NOK. I'm still short Euro NOK, as you'll see here in Euro NOK is also pulling back nicely. So let's see what it does from here, 61.8. But I really believe that these were exhaustive moves, or likely to be exhaustive moves. So I have those positions as well. USD MXN, we talked about it yesterday. It looked to me like this could lead to another head fake with a move below 2280. This is what I drew, and then I drew Dale's scenario as a second scenario. So so far so good. So I think that USD MXN might fade even further from here. Question about platinum. Listen, platinum. Here it is. So platinum still rebounding quite nicely. But you need to be a little bit careful, because I've mentioned multiple times that this area 775 is a strong resistance area. Okay, so we're now getting close to it. Be very careful. I wouldn't be surprised if 7075 rejected initially. Platinum, I think, is very undervalued, and I think it's going to be much, much higher in the foreseeable future. But that doesn't mean that it has to happen immediately. So I can't really advocate buying platinum so close to a very important resistance area. So what's 775? Definitely a break above 775 is going to be a big bullish development. I can tell you that much. I'm still short, by the way, 1/3 of a position palladium, but the way I see price action evolving, I'm thinking of taking profits here because I think I'm going to get a chance of reselling higher. So I'm still in the money. My entry was at 2,275, so I can still take some profits here. I was actually considering it earlier today, and I should have probably done it because I would have booked a little bit more. I'm going to decide what I'm going to do with it after the webinar, but this looks like a corrective formation to me. So my assumption would be a push towards 2,500, which is a very important resistance area, and then a failure from there. That's what I think might happen in this case, which would also point to further upside in risk. So a few more days of upside in risk likely before risk failing once again. Because if you've noticed, palladium is in generally very well correlated with risk assets. Silver and copper following. Steve, please. Time to long knock. Oh, I'm already long knock since some time ago. So, it has already moved substantially from the high. So if you don't already have a position, I would wait for a rebound to get a better entry price. Okay, because if you're asking me for my fundamental thesis, yeah, absolutely. I mean, let me say it like that. Fiat currencies are in big trouble with what's happening, and the fiat currency system is more than clear that it has failed because it gives the ability to governments to be imprudent and to act stupidly and to keep propping up things by devaluing their currencies. So having said that, I think that the NOK is by far one of the best fiat currencies you can own. Okay, and I've said that many times. So, if you want to own some of the fiat currencies, NOK is definitely one of the top 5, definitely. So, since we all have exposure to fiat currencies, either we want it or not, yeah, having your exposure in NOK, I think is one of the best ideas, with a medium to long-term horizon in mind. Okay, so I do think that if you're talking about longer term, it does offer value, even if in the short term, there is no real risk reward selling it here, having already moved substantially from the high. But I think that even if you buy NOK here and being willing to hold for a period of time, it will still look like a good price. So, I'm answering like this because, in order for me to give my point of view, which it can't be trading advice, as you understand, what I'm doing here is I'm always giving you my honest point of view and, how I think for myself. Because I couldn't even advise anybody because things like what is your time horizon, what is your risk tolerance, what is the kind of leverage you want to use, all these are extremely important elements that I can't have for any of you. I mean, I don't know what is your risk tolerance. I don't know what is the size of your account. I don't know what is your time horizon. So what kind of a trader you are. So, all that, what we can offer here is, our honest opinion, which I think is more frequently in the right side of the market than on the wrong side of the market. And then you can, take it into account. And if you think there is some use for you with that, adapt it to your own parameters. Okay. EuroCAD and USD CAD. Okay, we already covered USD CAD. EuroCAD. Let's open it up here. There it is. So EuroCAD. I like the fact that it probably has formed a diamond formation reversal. Let's see what happens when it fills the gap. The gap is here, 150, 150 roughly. Okay. I think that if we close the gap and we don't rebound from there, we can see much lower prices. Okay. But that's a big if. So let me make that very clear. Okay. Because very frequently you close the gap and then you move higher. So 150, 150, an important level for this market. What would trigger you to take profits on long SPX position? Good question. I should have answered it. A big daily reversal. Okay, so I want to see a big daily candlestick, a big daily reversal candlestick, which I would prefer if it comes with some fundamental backing. So, for example, let's say that Thursday we get this week's unemployment claims, and it's another 6.5 million people, for example. And then the market, realizes that, okay, all well with the coronavirus. I mean, it seems that we're now headed in the right direction, but I mean, we already have like 17 million people out of the workforce, and there's no chance that every single one of them is going to go back and find their work being there. Just to tell you a story, I was discussing yesterday with Trent from Forest Park FX, which I consider a friend. He's a really nice guy and one of the the best people I've seen in the industry. So I can't keep recommending Forest Park FX more highly, but I do because they're excellent. So if you're looking to benefit from your trading and not your broker being the only one that makes their commissions, go to our site, go to our investment program, and you can live chat with them there or send them an email. Trust me, you're going to make sure you have the best broker you can for your trading style. They only work with brokers that are 100% guaranteed that they look after their clients and you're not going to be losing your money or anything happening. And you can get some cashback or a reimbursement check through ForexAnalytix, so you can actually pay for your subscription. Anyhow, I was speaking with Trent and he was telling me a story that since he's in the US, that he has a close person to him. I'm not going to say details. That he has a company, and initially he and many other people that have companies that they know decided that they're going to hold off before firing people off. So they gave them an option to get part of the pay for a limited period of time. And now they've all started realizing that the demand for their services are not going to be anymore there when this is over, even if it's in a few weeks from now. So they've decided to actually start laying people off because they're now more than certain that demand is not going to be the same following this. And this is an example from people that are in the real world and have real businesses. So trust me, this is not the exception. It's going to be the rule. I'm not saying that things are not going to improve once this is over. I mean, it's not going to be the same as when we're in lockdown. Obviously, it isn't. But the question is the following. Is it going to be the same, like nothing happened, like turning back the clock, let's say at the beginning of February? No way. Absolutely no way. So keeping that in mind and knowing, for example, that S&P was priced into perfection at 3.4 thousand, where do you think is the price point that it offers value, knowing that we're going to be in a recession and an index that was priced into perfection, meaning no recession in sight, full employment, etc., where do you think corporate earnings that would keep increasing, where would you think the real value for that index is going to be in a recession, corporate earnings decreasing, unemployment having jumped substantially from where it was? So, you answer that question for yourself and then decide where you want to be a buyer and where you want to be a seller. But let me make it very clear. If you think that 3,000 is the real value, no, I'll have to tell you that I very strongly disagree with that. Euro, Aussie, what's your initial target on your? My initial target was 2,600 and 2,700. So I took some profits. I actually had said 2,600, but I ended up taking half of my profits at 25.85, if I remember right, in my long S&P position. But I didn't take the profits on 2,700, which was my second target, because I saw that, you know, it's very well bid. So I'm still holding that last half of a position. My entry was my cost average, actually, because I had more than one entry, was at 24.20. I had to be out of the money for a period of time, and I was out of the money for several days. And Loljo. And you know, that's it. That's how I've handled this position. May I ask if you're eligible for the raffle if I'm watching your webinar from YouTube? No, because we don't have your data. So you need to watch it through Zoom so we can export, because you know we can only get a list of attendees through Zoom, because you know it's a platform we pay for, so it gives us like details for whoever have subscribed. Okay, so you need to participate through Zoom for you to be eligible. On the daily, natural gas hasn't broken channel and a lot of confluence now. Not according to how I've drawn the channel, but we'll find out quite soon, won't we? Gold and crude, bank nifty, natural gas, gold. Okay, let's have a look at nifty, and then I'm going to go to other questions that we have several. Okay, bank nifty, nifty here, and bank nifty here. Clearly corrective formations, if you ask me. Okay, so I expect them to fail again. Perhaps from a little bit higher, likely. But for example, bank nifty, watch this channel. Okay, you can see it here. That's what I would assume would happen there. Okay, Aussie Swiss, let's go. We have several questions. Euro Aussie, let's go for Euro Aussie first, and then I'm going to go for. So Euro Aussie, here it is. Euro Aussie breaking through this channel, but despite that, I'm not very convinced that this move lower is anything but corrective. Okay, especially since I think there's going to be more risk off. And we know that Euro Aussie is very correlated with risk off. I mean, when you have risk off, Euro Aussie tends to do well. I would assume that it's going to push higher once again. Now, this is an area of support, 174 and then 171.20. Not going to be easy. You need to have low leverage here because it tends to move quite a lot, admittedly. Right? But I would be watching for the channel. If you want the long-term view, let me be very clear. We've broken above this long-term ascending channel, and as long as we remain above it, the trend is higher. Okay. Now we are seeing, you know, a correction lower. There's no question about it, because this was an exhaustive move higher. But I'm not convinced that we're done here in the Euro Aussie. So I wouldn't be jumping the gun being short. The place to be short was when you saw that huge outside reversal day. That was when you could be short for a period of time. But you know, the closer we get to these areas of support, I think the less likely it is that, you know, it actually makes sense. Same deal here with Euro Kiwi. I mean, Euro Kiwi, the problem with corrections, I've mentioned that several times, is that you don't know what form they have. You know, you keep adapting your drawings until you have more price action to be sure. But in any case, Euro Kiwi, as long as we stay above 178.80, let's say, the trend remains higher. Okay. Aussie Swiss, let's have a look at it. So here it is, Aussie Swiss, quite a big move lower. I mean, we blew through the lows. Quite a nice recovery here, but so far, I don't have any reason to believe that this recovery is anything else than corrective, right? So I think this is going to probably turn lower once again. And guess when it's going to do that? When risk sours again. So all of those things that we've looked today, many of those things that we looked today, you know, they all depend on when risk is going to turn off again, which I think is not going to take more than a few days, worst case scenario, a week, 10 days, something like that. Okay. Next upside target is the 50% fib here, but I would expect once we see risk off again, this is the perfect risk of currency, by the way, right? One of them, because first element, the Australian is generally decently correlated to risk. It used to be much better, but it's decently. And Swiss franc is the absolute safe haven, right? So, under, risk of conditions, this suffers due to both the Australian dollar moving lower and the Swiss franc moving higher. So I would expect this to fail, sooner rather than later, since you're asking. Let me see if there is something I didn't cover. What is your guess about the oil in relation with the meeting of OPEC today? I don't like to do guesswork. I like to find areas in the market that offer good value. So, I was certain that crude offered good value at 20 or below 20. Now, the easy money has been made to the upside in the very short term. I think crude is going to go a lot higher, but I wouldn't rule out. I mean, how can I rule out a failure and a move lower in crude before it can move higher? I can't, right? So I don't like to do guesswork. I like to find good trading opportunities. And, I don't think you should be trading based on guessing. We also had a question, and it was quite earlier. What about CAD yen? So let's have a look at that as well. And about CAD yen, I can tell you that you have a clear formation you can trade here, and it's this one. This is a rectangle. This is a textbook rectangle. Okay, so we have this rectangle. We're very close to resistance, short term, and risk reward trade is short against resistance. Now, if we do break out legitimately above this resistance, let's say 78.50, 78.40, 78.50, then we trigger this rectangle, which would target a recovery to 80 to 70 or so. Okay, so that's your trade there. Short as long as we are below this rectangle's trend line resistance. If we break above it, then look for the rectangle's target to be fulfilled, which is up there. Let me see. Okay, I think I covered more or less everything. Okay, so let me find Joe. There is one more question about USD ZAR, and then I'm going to pass it to Joe. Let me locate him first. So USD ZAR, nice rejection. If you remember, I said yesterday that USD ZAR is in danger of rolling over from there. Look at it, perfect rejection from this channel, currently testing channel support. Keep in mind that if we break through this channel, which I consider quite likely, you should see a bigger corrective move lower, and then it's going to be time to probably fib this move and start looking for downside targets no less than the 38.2% fib, which coincides with that low there. So I would assume a breakdown from there. First target would be 1727. Could see a bigger correction than that, 50% fib at 1663, so on and so forth. Okay, everyone. So thank you for being here. Today's attendees, be here tomorrow because we're gonna, roll for today's winners. 3 people will get a 1-month premium subscription on ForexAnalytix. So see you all back tomorrow. Hopefully Dale is going to be with us. As I said, we have every reason to believe that he just didn't hear his alarm clock or whatever. So thank you all and see you tomorrow.